Good morning, veterans. So we're back with another analysis on the V75 market, and also go through very quickly on the boom and crash indices to know the trend and what strategy to use. So anyway, yesterday I didn't do analysis because I was quite sick and I'm feeling unwell, and also I had a lot of stuff to handle here. And also, we don't do analysis on Saturday and Sundays, as you all know. We made that announcement like 2 weeks before. But I will do this because yesterday I didn't do any analysis. So, guys, let's get to it and do the analysis. So, in the last Thursday analysis, I said that there will probably be a bounce back. I drew a range, I drew some lines, and I told you guys if there will be a bounce back, then we will be looking for bounces on the line. So let me draw my see. Let me draw the lines here, the trend lines. So always place your trend lines on the body bones, not on the weak bones, guys. I'm quite of trying to remind you on that, on the body bones, not on the weak bones. So okay, there, perfect. That's kind of like I'm trying to use to trying to place on this body, but as I usually tell you, the recent data is very more accurate than the past data. Though even in this, we can use the 30 minutes to draw the lines. Though on the 30 minutes, it will be like kind of a weak bounce on this, because on the body bounce is kind of like below here. Anyway, use whatever time frame, but not the 4 hour. You can use the 4 hour, but you might not get that, because the 4 hour is kind of like this, and giving you another chart pattern is kind of giving you another thing, because on the 4 hour you have to drop these to here, and you have to hold in case is there a break above or a break below. I'm trying to know the line here, which chart pattern are we in. So I'm kind of like be using just the 1 hour, guys. For me it's way better for the 1 hour. So let's just go for the 1 hour and place on the body bones, not on the weak bones. Some people place on the weak bones, but it will give you false signals like most of the time. Okay, so here we have our chart pattern. So maybe people may ask, why are you not placing in this is just a lower high on the prior bullish trend, and some people may say this looks like a bearish rectangle. A bearish rectangle is not like this. Let me draw you a bearish rectangle will be like this. I'm just drawing a line here. Okay, let me draw with this. Will be like this, a bullish rectangle. Oopsie. What did I do now? Okay, let me draw a simple way to show you a bullish rectangle. We have patterns here which look like it has exact like lower lows, and the same level of lower lows and the same level of highs, at the same level of lows and the same level of highs, guys. The bounces are usually within. If this range could have been like the one I'm drawing here, it's just kind of like a rough drawing. Anyway, you kind of see that the highs and the lows are exactly at the same level. Now Also, if we had like the prior bearish, sorry, this is supposed to be kind of like this. If we had a prior bearish, this, okay, what you see here now is the drawing of the bearish rectangle. We have a prior bearish trend, then the highs and the bounces, the high and the lows are exactly the same line of, the lows are exactly the same line of support, and the highs are exactly at the same level of resistance. So this is not what we have here. We see it's kind of different, guys. You see, it's kind of different. So not to waste any time, also some people may say, oh, it's kind of like a rising, a falling wage. No, guys, it's not a falling wage. It's not a falling wage. What you see here is the bearish flag pattern. Bearish flag, actually. Yeah, it's a bearish flag, though people may not agree, but it's a bearish flag, because if it was a rising wage, if it was a rising wage, let's see, because the rising wage usually have the high, the lower, okay, we have a bounce here, and we had a bounce here, we had a bounce here. This could have been a bounce if this bounce was, this kind of lowered everything. This was okay, this was quite okay. If we had a bounce here, like the price could have turned at this level, then it could have a rising wage. Just below this level, we could have a rising wage, but it went up, and you see, it went way above, and we had a bounce back. So it's a flag pattern. So it doesn't have to be like the perfect, perfect flag pattern which you use for to draw. I'm kind of like using time here to show you how a flag pattern usually is. Okay, so flag pattern is usually kind of rising up at the same time. Okay, this was not well done. Okay, I'm kind of showing you how the rising, the flag pattern usually is. So just try to see. Okay, this is a flag pattern now. This is a flag pattern. A bearish flag pattern is usually like this, because we have the lines, here, okay, rising highs and rising lows. Quite simple, rising highs and rising lows. That's the flag pattern all about, the rising highs and the rising lows. So not a falling wedge or anything. What you can see here is quite similar, not very accurate similar, but quite similar, guys. Because you can see, it's not a rising, a falling wedge. It's not anything like a bearish rectangle. Is a rising, is a, it's a bearish flag. So if it's a bearish flag, we are looking for a break below. A break below is usually marked by, if there's a bearish, if there's a black below, is usually marked in case we have like it's going up. And so we might have a black like this here, which I'm trying to illustrate. Black below usually marks continuation, though there can be a black above and anything, but you know, the market doesn't have always changes every day and everything. So here, and it will go down. Wait for a retest as usual. Wait for a retest before entry, then it will go down. So this is kind of what will happen today. There, that with analysis here. So guys, watch out for this. There will be a bounce back here. If there isn't, then there will be a break. If there is a break here, it's fine, not bad. If there's a break here, there will be if there's a bounce, okay, wait for a break above, wait for a retest, then you can enter. If there's okay, let me try and draw maybe if there's a break above, in case, just in case there's a break above, though not with high probability, but just in case there's a break above, wait for a retest. A retest, then you can enter the I quite use this. Then you can enter the trade. Okay, if there's a break below, then you wait for a retest also. You wait for a retest. Quite using the same lines here, not to go and try to wait for a latest, and then boom. So this is what might happen today on the V75, guys. This is what might happen, so be aware of that. But use your 30 minutes or 50, mostly 30 minutes, guys. I advise you to use 30 minutes for entry and exits and everything. You can use the 1 hour, it's not bad also. I use it all the time mostly, but I use 30 minutes, 15 minutes, yes you can. So anyway, this is what will happen, but with high probability, because it's a bearish flag, and so on. With this has high probability, a black below and a retest, then you can enter. So you enter trade here, just a bearish candle which mark a bearish candle which will bounce back here, a bearish candle which will bounce back. You wait for that candle to finish, then you enter, which will bounce on this line. But if in case goes in, goes above, I don't think that will not happen. If it goes below, there will usually be a latest. It can go below and then go above. That will be very rare, and I'll be quite confused. But anyway, expect anything. But this has high probability than this. If didn't wait for if this will happen, you can wait, and you can enter the trade. So that's we're done with the let's go to the we're done with the V75. Let's go to the crash 500 analysis on the on the trend line, on the trend, I mean on the trend. So as I usually tell you guys, those who are using the VAT, use the 15 minutes to analyze the trade, and you can use a tablet or a smartphone. It's way easy. So we kind of like we had a down a prior downtrend here. It was good for VAT2, though we are kind of like in like consolidation earlier. So we've been at an uptrend, so this consolidation is good for trading the VAT1 plus. So if you go to the 30 minutes, which I don't advise, even if you use it, you can see it clearly when a consolidation area, kind of like from starting to form an uptrend, or so we can still trade this very well as long as we are not in a sharp downtrend. Don't trade when you're downtrend like this, and on the using the VAT1 plus. Use the VAT2 plus when you're downtrend for crash 500. So go with the VAT1 plus on the crash 500, and let's see about the boom 500. Oh, it's a downtrend. Obviously it's a downtrend. It's a downtrend, so guys, use it to trade use the VAT1 plus also for the boom 500. Remember, 10 entries you can use at any time as long as the trend is okay when a downtrend. So as long as the trend is okay, you can use the you can trade at any time, but make sure you enter 10 entries. If you're using a 10.0 lot, then means $100, then you're off the market. If you're using a 20.0 lot, which is for people with 1000 ka with 1k account, so you can use the $20 size, and five entries you have 110 entries, $200, and you're out. If you're using a 5000 plus account, you use $30 a 30.0 lot, which 10 entries would be like $300 and so on. I think that everyone who has boosted in their account usually asks me for those. So if you have an account, you can ask me what lot size to use. But I think everyone I told the lot size to use. People with 500 stick to 10.0, 1000 stick to 20.0. You can use also the 10.0, and also the above 5000, 1000 to 5000. You can use just the 20.0 lot. It's not bad. So anyway, we are done with analysis. See you guys on Monday analysis. And pray for me. I'm quite sick right now. I'm very unwell, like very bad unwell. I don't know how I'm making this.